Hello guys, welcome back to my YouTube channel, Financial News. So I made a video about introduction about what I'm planning on doing. So those of you that have watched that will know that I'm planning on doing a weekly podcast on Saturdays about obviously the week that had just gone by, about sort of the main news or things that you should look at going forward that will affect the markets. So I thought before I start doing those weekly podcasts, I'll do a quick run of what's actually happened with the market in the last couple of months mainly, to get everybody on the same sort of page going forward about obviously, because the material that will go into the podcast will obviously be linked to the market conditions. So it'd be good to get everybody on the same page and make sure everybody knows what's going on in the markets and what things you should be looking at. So let's begin. So a bear market. So a bear market by definition is a 20% fall from peak. So we have just about entered a bear market in pretty much all the indices that I've listed on the PowerPoint. The US indices, so the S&P 500, which is basically the 500 global, 500 stocks, 500 largest stocks in the US. Sorry, Nasdaq is mainly all the tech companies. Nasdaq 100 mainly on the top 100 tech companies in the US. The Dow that holds the companies with the largest market cap, and the FTSE 250 is what I mainly look at rather than the FTSE 100, because the FTSE 250 is basically a UK index, and what it does is it looks at sort of the domestic companies mainly that are involved. It gets those included. If you just look at the FTSE 100, the disadvantage you have is that there are a lot of companies that actually make most of their earnings abroad. So I want to make sure we get FTSE 50 just to get more about the domestic companies, because we want to see what's actually happening in the UK domestic core market and the US. So we've obviously entered a bear market in all these major indices. So now what is obviously to look next? So just to sort of get a bit of a background as to what are the main drivers in the drop in the markets. So obviously the US-China trade tariffs, that's something that's been ongoing for some time now, and the problem with that, I think that a lot of people are seeming to miss, is that the communication obviously coming from the White House, mainly from President Trump's tweets, is not helping at all. There we get sense of relief, or investors get sense of relief about that the US is coming to some sort of a trade agreement with China. In return we get a sort of a pump in the stock market. Yeah, obviously it doesn't turn out to be as credible, and then obviously it makes matters a lot worse, because then people are like, well, if it's not credible news, is he trying to hide things? Is there more to it, or what should we look for, look what's actually going on underneath? So that's definitely one of the big drivers, I think, because that creates a lot of uncertainty in the markets, and people got to understand that US and China are the largest economies in the world. So if there is a trade dispute between them, because they are the largest economies in the world, if anything happens to their markets, it does play an effect to other countries. And I don't know if this is something that you've heard of, a quote or something that's said a lot. They say if US sneezes, UK catches a cold. So that's basically a way to just imply that what's happening into the US will definitely end up playing a big part of what happens in the UK after that. And obviously the next main driver that you could argue is just Donald Trump himself. Obviously he's a character, as we all know. So it's hard to sort of understand what's exactly going on in his head and what he is thinking about to do next. Obviously there has been a US government shutdown, which wasn't great, because obviously alongside all this uncertainty, you've then got another shutdown in the US government, which doesn't allow you to then think, okay, there is stability or there's a consensus agreement between the obviously senators in the US. Again, another thing is that, in my opinion, that a lot of people also didn't sort of factor in is the valuations we got in the technology companies. So the companies in the Nasdaq 100 in particular, we had companies that were trading at, I usually look at a multiple towards revenue rather than earnings. Reason being is because a lot of tech companies do make negative earnings. They obviously are spending a lot on capex So I usually use the driver as the revenue multiples. So a lot of companies were trading, in fact, 15 to 20 times earnings, and now they're trading at valuation of 10 times earnings. So you can see the massive effect it's had. And usually, in average tech companies, in my opinion, 10 times earnings is probably a good fair valuation. Anything more than that just seems to be a little bit of a push. So obviously those had gone a long way. I'll show a Nasdaq chart in a minute, but it will show you sort of the growth that we've had in Nasdaq in technology companies, and naturally a lot of money is being poured in, so that can obviously make a big effect in the markets. Brexit, as my European and UK friends will know, is a big, far from big conversation over here in the UK about whether or not what's going to happen with the UK, the uncertainty that leads on to Europe, and then obviously then trade deals between the UK and the US is also going to be under jeopardy, obviously because the US is quite a big driver, saying that, look, we want you to completely have a hard Brexit, leave the European Union, and then we'll happily make a great deal. So it is a little bit of a double-edged sword. Debt problem, I'll go a lot deeper into this probably in a later episode, but there is humongous amount of debt in economies in the country, in the US in particular. I think we're at levels a lot higher than 2008, in fact. But I think one of the main drivers that have caused this debt is in the last decade we've had virtually zero interest rates. And now what happens when interest rates are zero? Everyone wants to borrow money to then invest it, because if you put it in the bank, you're getting 0%, so you're not making any growth on your money. And if inflation's at 1-2%, you're losing money, in fact. So everybody wants to then borrow money, buy homes, or put money into the markets, or spend money on cars, or whatever it may be. So obviously consumer debt is at a high, really high level. So that is something to also take into account. So safe havens, I wanted to go through a bit quickly in this. What could you do in these markets? Well, safe havens are normally the precious metals, gold and silver. I personally will let you know in the next slide exactly what I've bought already and I've had decent gains on, but it's still a really good time to buy, and that will be the treat for my fellow investors that are in watching this video today. So I'll just move on to that now. So yeah, your lucky day. What am I actually buying? And in short, the answer is silver, right? So why am I buying silver? Let's actually pull up a chart as well and let you guys know exactly what's happening. So let's get silver up. So if we look at silver in the last 3 months, right, we've had periods of silver. So we had the October peak, October 2018 peak. So we were trading in silver around 1450, right? So why have I chosen silver basically? So a safe haven is obviously considered usually in gold, but people got to understand is when precious metals like gold rise, the next to follow is the other group of baskets of commodities that are also linked in precious metals, silver being one of them. And now gold is talked about far from the media. People are obviously aware about gold being the haven, and everyone wants to pour into that. So rather than pouring into what everybody else is pouring into, you pour into something that will react over the gold price, because then that way, one, you'll be earlier than them, so you'll get the gains, you reap the gains from the start. And secondly, you will, because if everybody's in gold, a lot of people are in gold, and obviously people buying and selling, it will limit the upside return. Whereas places like silver would have more of a jump and an immediate bid, if gold does rise to the levels that it can. So I bought silver around 1480, but let's just say even today's price, I don't want to get people saying that, okay, you have to buy at the price that I bought. Even at today's price, it's a great buy, and you should be looking to hold it for a couple of years. Don't buy it. If you want to trade it, sure, you could, but the point being is I'm giving this advice as a long-term hold to protect you against the volatility in the markets and to hopefully make you a lot of money. So where can it go to? Well, I think it's got a good chance to even double in price, but we can worry about where it can go to a bit later. But right now is a great time to buy into silver to protect yourself from the crisis happening right now, and arguably start of a bear market you got a couple of years till it plays out, to the market's tank, and you don't want to be one of them that does lose most of their money. So again, like I was saying, talk about the Nasdaq. Let's just quickly let you know where are we trading at now. We are trading at over 20%. So obviously we have entered the bear market, so it's a great time to hedge your bets. If you're sitting on cash, great time to buy into some silver today. And yeah, so hopefully you enjoyed this video. And let me know if you do end up buying silver. I'm happy to talk to the people that have watched this video and want to ask me questions about it. Just comment down below and make sure you subscribe, share and like. And hopefully we talk about silver in about a year's time. Talk to you later. Bye.